Hey everyone, Kyle here with another Tax Talk Tuesday update for you. And today we thought it would be helpful to rehash some of the things that you'll want to know, or we think you'll want to know before you file taxes this year. We've talked about some of these before. Others of these are just going to be reminders. Some deal with the life changes that many of you may have experienced throughout this pandemic. But regardless, we hope this kind of quick hit list is helpful to you. So to kick things off, first just wanted to start with a reminder that unemployment benefits, if you received those last year, those are taxable. So if you're one of the millions that received unemployment benefits in 2020, including that extra $600 per week that you might have received under the CARES Act, if you haven't already, you're probably going to receive a Form 1099-G. That's going to show you the amount of the benefits that you received. And again, those benefits, unemployment benefits, are taxable. In that same vein, the second point we wanted to make here, if you were one of those individuals who received interest on your 2019 tax refund that you received in 2020, if you remember, those were delayed due to the pandemic, but the law requires that interest be paid on delayed refunds. That interest is also taxable. So if you received over $10 worth of interest income, the IRS is going to provide a Form 1099 INT if you haven't already received that. Another one that's taxable that has come up a lot more this year, the so-called gig economy. Gig economy work is taxable as well. So if you've been doing work on the side to supplement your income, the income that you earn through this so-called gig work is also taxable. In short, if you have earnings from self-employment that amount to more than $400 through this gig work kind of system, even if it's a side job, part-time, temporary work, that money, again, is taxable. So just to kind of recap, we've got three different categories of taxable income that we may or may not have thought of in the past. Those unemployment benefits are going to be taxable. The interest you received on the tax refund is taxable just like any other interest that you might have received. And if you've done any side work through this so-called gig economy, the money that you've received through that is taxable as well. So don't want to underreport or underfile there. But on the other side of things, talking about tax credits now, you may, and you probably owe it to yourself to check out the various tax credits that are available that you may not have been eligible for in the past, just because of the changes that 2020 brought us. Again, want to double check on some of these tax credits. Some examples, or some of these credits are going to lead to a tax refund even if you owe no tax. So some of them are what's called a refundable credit, meaning it can push you into a refund. Some examples of this might be the earned income tax credit, which is for low to moderate income households. The recovery rebate credit, which is for individuals who were supposed to receive the full stimulus check last year and maybe didn't receive that full amount. And then things like the child tax credit or the additional child tax credit, making sure that you are checking in on your eligibility there before you file your taxes. A new, not a credit, but a deduction this year is the basically a charitable deduction for non-itemizing tax filers. So typically, unless you contributed a whole lot to charity, most people did not get a charitable deduction on their tax returns if they were taking the standard deduction. This year, under the CARES Act, Congress basically said that they'll allow a $300 deduction in addition to the standard deduction if you've made a cash gift to charity. So this is the qualifiers here, or it has to be a cash gift. You can deduct up to $300 is going to be the limit. And this is in addition to the standard deduction. The whole idea was to promote charitable giving throughout the pandemic. I believe, and I'll double check it, I might have talked about it before, but that amount has been increased to $600 for this year, so 2021. That is not something you can file for this year. So your 2020 taxes, you can take up to a $300 deduction in addition to the standard deduction. If you were an itemizing tax filer, this is less of a big deal. you can continue to deduct what you would normally deduct there. Another big deal, and this one actually relates a little bit more to the Secure Act, but ties to the pandemic a little bit as well, especially for individuals who look like they may owe tax. You can now make IRA contributions or continue to contribute to your IRA after the age of 70 and a half. So this may allow a deduction on your individual federal income tax return for the amount that you contribute to the IRA. A lot of this depends on income. There are phase outs involved here, but basically taxpayers can make contributions to their IRAs up until tax day, and that's an important point. You can make a contribution up until April 15th and still, deduct that amount on your 2020 tax return if you're eligible to do so. Related to this, also under the CARES Act, if you had to tap into your retirement account this past year, the distribution that you received up to $100,000 is not going to be subject to the 10% additional tax that is usually levied if you take those distributions prior to the age of 59 and a half. So basically waiving that usual withdrawal penalty on an amount up to $100,000. There's other rules involved here too, but the key is if you had to take money out of your retirement account, you're not going to pay that additional 10% tax there. And then a couple things that the IRS just wants us to know. Most refunds are going to be sent in 21 days or so, but some tax returns are going to require further review and it will take a little bit longer. Just a good estimate from the IRS this year, at least on the federal side, is that refunds are going to take around 3 weeks. And it's just important here. The IRS is cautioning us basically not to count on that money. Don't look at it for bills and just expect it within 3 weeks, but just understand that it could take a little bit longer. And then the other notice from the IRS here, everyone should file their taxes by April 15th, even if you can't pay the full amount of tax that's owed. This is going to help avoid late filing penalties. It can also avoid the interest charges that accrue on an unpaid balance. Just important to know here, the IRS, while they can work with you a little bit on the penalty side, by law, if you don't timely file your taxes and have an unpaid amount, that interest is required. They can't really work with you on the interest side of things. There are other things that they can do. They can give you short-term extensions. They can provide a payment plan. They can work with what's called an offer in compromise. But basically, they're encouraging everyone to file something by April 15th to avoid those penalties and interest as best that we can. But for now, that's it. I hope that these highlights are helpful as you prepare to file your taxes this year. If you have any specific questions or topics that you feel like would make a good video, please let us know. Everyone's situation is different, but your question might be helpful to someone else. So if there's something that you just wanted to know, feel free to reach out. Happy to take a look. But until then, we hope you have a great Tuesday and a very nice week ahead.